Good morning everyone, it's Gail with Traders Help Desk, and in this video I just wanted to go over the indices futures. Right now I'm looking at the NASDAQ and the Dow, and you can see that it's tested the red dots. It did manage to flip the ATR from white above price to white below price, so that tells me there is a potential for this market to go up. However, typically what will happen is it will come back and test this new ATR, which is below price at 72.58. You can also see that a lot of sellers came in when this tested the red congestion dot. Now, typically what happens is that when this happens, you'll flip the ATR and then you'll come right back to test it. And once it tests it, as long as you do not get volume divergence, it will go and exceed this high. And that's what I'm waiting to see. You can see it also on the Dow Jones. You have flipped the ATR. Okay, now it's coming back to test the ATR. So I'm waiting to see if there is volume divergence. Now, I expect it to come right to this ATR before it starts up, especially with the stochastics being right at the point of overextended. By coming back to test this ATR, it gives time for the stochastics to come down, which is exactly what we want to happen. Okay, in this case, you can see that it's come back to this ATR. And you can also see that sellers decrease. That's exactly what you want to see happen. And in this case, I anticipate this area being exceeded because sellers pretty much abandoned the move. You can also see over here on the Dow Jones, the same concept. Your sellers decreased. You're right at the ATR, so you would anticipate this area being exceeded. Now, the difference between these two is that the ATR is above price over here, the red ATR, and over here, the red ATR is below. So that's the only difference between these two. Now, it's not just the Dow and the NASDAQ. You can also see the same thing happening over here on the ES. You can see that both the white and the red ATR is now below price. Price has come back to test it, and when it did, there was volume divergence. You can also see this was the last low that was made, and if we connect these right now, you're getting hidden divergence as this is coming back to the ATR on the ES. That's an entry with anticipation that this area will be exceeded on the next move. Now, if you are watching the NASDAQ, you see the same pattern that we saw on the ES, in that you are making higher lows but lower lows in the stochastics. Again, this is hidden divergence, and you have volume divergence on the lows as well. So that says that more than likely the market will go up. You also see on the Dow Jones, it came right back to test this, and when it did, you can see again there's hidden divergence. You can also see that on that last bar right here, buyer stepped in because the hash mark is above 0. So again, it's just telling us that more likely than not, the market will go up. Over on the ES, you also see the same thing. Again, you're expecting it to exceed this area. Very well may get to these red dots up here. Now, normally, and I just wanted to explain real quick, normally I have 3 sets of ATRs here with the congestion dots. In this case, all I did was set two of my time frames to the same interval. In this case, it's a 12-minute. So the white is representing 3 minutes. The red is representing 12 minutes. So in this case, I know from looking at this that it just tested the 12-minute ATR, which is the red, and it should go up to this line of congestion dots. Now, as you can see, the ES is moving just as we anticipated. I do think it may get to the 2775.5 area. If it did, you would be wise to take profits, because a lot of times it will bounce down from this area, because this is the first touch on the ES. Now on the NASDAQ, it should actually break through that area, indicating an upward movement. Additionally, on the ES, you can see that you're approaching the area of being overbought, which is just another reason to actually take profits at 2775.5. Now, this also highlights why I like entering right at the ATR. Most people would enter on this bar. I'm entering on this bar because I'm watching the volume. On the ES, it would be here. On the NASDAQ, it would be here. So basically, you do not have a lot of risk. And as this moves up, you can move your stop up with price. So in other words, you start with the entry here, your stop is right below the ATR, and then as price moves up, you just offset the low of the previous bar. So in this case, on each one of them, you would still be in this particular position. Now, initially your stop would be below the ATR, and that would be the ATR that's closest to price, which is the white one. And now you're actually setting right below this low, because that was the last bar that had formed. Just a really easy way to walk the lows upward as you are long. And again, you can see that the ES is overextended, and this is what I like to see. You can see sellers are actually stepping in right now. This is where I'm out. It's really that simple. And you can see sellers are stepping in each of the markets. Actually, on the NASDAQ, you had divergence on the highs here, and then sellers started stepping in. Here you can see that sellers are stepping in. And again, this would be typical with the stochastics at the point of being overextended. Now, on these charts, I do have my favorite indicators, which is the stochastics, the directional volume indicator, the ATR support and resistance. And instead of using 3 time frames, I'm basically only using 2. And then you have the stock div, which identifies when there is divergence. So here you have divergence to the upside. I believe on the ES, yeah, you had divergence to the downside, and it just plots a dot to let you know that you had divergence. But these are really simple ways to identify trade setups if you can read the volume using the directional volume indicator, read divergences using the stochastics, and identify the support and resistance by using the ATRs. They're all included in the diamond and silver package, as well as some other indicators that I also use. And with the diamond package, you actually get 10 hours of mentoring with me one-on-one.